one of the interesting things is with aircraft financing is it's a small community, but it's for a very big business. I mean, this year alone we'll be looking to raise about $100 billion for the deliveries from all the different aircraft manufacturers around the world. So we tap into many different types of financing to get that done. Operating leasing is now one of the big parts of what's happening in financing, because you have to ask yourself, what does an airline really want to do? Does it want to own aircraft and have to worry about the investment in it, or are they really about transporting passengers and providing the best passenger experience they can? And obviously we think that's the latter. So we're looking to develop the relationships with the different types of institutions that are interested in owning those assets. And so we feel one of the big things to do is tap into the capital markets. The traditional aviation lenders, which was the European banking community, has gone through its challenges of recent years. So we've seen a real shift in the marketplace. There's other new regulations that are coming into the industry. Basel III, which is causing a lot of different changes in the banking and how they look at their liquidity and their capital requirements. And long-term lending is not necessarily the right thing that they want to do. That doesn't mean that they're not going to play in the aviation sector space, but they may be changing what they're doing. So where are the new lenders going to come from? Where are the new investors going to come into aviation finance? So those are some of the new things that are happening now. The deliveries are going up. As I mentioned, it's a $100 billion business this year between all the manufacturers. And the operating leasing companies are now, we think in the next 10 years, going to be owning about half of the deliveries that come out of the shop. Now they have to fund themselves, so that's another sector in terms of where do they get the lending from. Capital markets in the U.S. are about $1.2 trillion a year in terms of investments. So when you think of about $100 billion, it's a very, very small sector, even though it's out of a 1.2 trillion. So there's the lending community, there's the capital markets, there's the operating lessors, and then there's other types of investors that we think are really very ideal for aviation lending. And that's people that have long-term maturities, such as pension funds, insurance companies, sovereign wealth funds. These are all people that have very long-term liabilities that they need to match assets with. We think aviation assets are perfect for that. And so one of the things that we're doing at the Boeing company is working very, very hard to try and match those parties together. As I mentioned, there's new banking regulations that are coming into play. That's Basel III. And as the banks change their investing habits, that's going to be happening over the next few years, and we're watching that. There's new money coming into the space. The Japanese, for instance, have a lot of money to invest right now and are interested in coming back to the sector. If you go back to the 1980s, the Japanese were actually the largest investors in the aviation sector. They came out of that space. They've always been in kind of a Japanese operating lease, but now what we're seeing is the regional banks in Japan want to get back into the business, and so we're looking for ways to find out that. The Middle East is coming into the space. We're seeing Australia with the pension fund investments they have there. They're looking to invest into aviation. So there's many different regions throughout the globe that are looking to really get into aviation. And that will be, I think, one of the big things you'll see in 2013 and 2014, as well as the continuing development in the operating lease sector. And there'll be growth of the individual companies that are out there today. There'll be some development of new lessors, and there may be some conglomeration in creating even bigger ventures than there are now. Just several years ago, we weren't delivering as an industry over $65 billion. Here in just 2 years' time, we're now over $100 billion from 2010 to 2012. That's going to continue to grow, and we think it's going to cap out probably about $125 billion in 2015, 2016, where the delivery numbers in terms of both single-aisle aircraft and twin-aisle aircraft, both for ourselves and our competitors, but that's a pretty sizable number. So plenty of opportunity for the different financing institutions to participate in this business. It's being driven by the whole industry, and The growth in the emerging markets is certainly an important factor, but it's also it's replacement aircraft for customers in growth, more mature sectors who need to replace fleets. When I look at our current market outlook over the next 20 years, there's over $4.3 trillion worth of deliveries required in that 20 years to refleet all of these aircraft and to also provide the kind of growth that's needed in emerging markets and in Asia. Well, it certainly is, and that's why replacement is about 40% of what the requirements are in the marketplace today. Because when you look at high fuel prices and what it's done to the sector, it's been devastating. The airlines have done a terrific job in really controlling their costs and deleveraging over the past few years to a point where now they can withstand some of the types of expenses and operating expenses that are happening in the business. When we look at, say, the cost of financing versus the cost of fuel, and we've looked at it on certain aircraft types, for every $3 change in barrel, you can have a pretty significant cost within the financing sector. But it's not $3 they've been dealing with, it's $40, $50, $60 a barrel changes that they've had to make in terms of handling their operating expenses. So better technology aircraft with more efficient engines and more fuel-efficient operating aircraft are really going to be required for an airline to continue to be profitable in the future.